Mr. Aditya, thank you so much for joining us today, and talking to us about your quarter two results. I just wanted to start with, realizations first because we have seen flat revenue growth in this particular quarter. Talk to us mainly what led to this lower realization and going into Q3 and Q4, any kind of outlook that you have on the realization target.
Yeah. Firstly, a very good afternoon to you and to all the viewers. Talking on the realizations, since it is normally in the second quarter, it is the post-monsoon quarter, and also it was the post-election time. So slightly the realizations were slightly lower by around 3 to 4%, and the and as far as the volumes are concerned, the volumes were more or less matching if you compare to the last quarters also.
Okay, talk to us about pricing as well. You have been able to maintain your margins, particularly in the value-added products category. Is there any pressure that you're seeing on the pricing, and how are you dealing with that?
See, before we come to the pricing, one thing should be highlighted is that if you compare our results to the first quarter, means the second quarter, normally for all the companies of our product lines, they are normally slightly muted when compared to the first quarter. But if you compare the results of the half yearly of the last year, there has been a revenue growth of approximately 10%, and the EBITDA has grown by approximately 29% if you compare the growth as compared to the last year. So, in fact, I will be very happy with this performance because in spite of this muted second quarter, the half-yearly targets are on track.
And essentially saying, Aditya, is that the second quarter is usually a weak quarter. Is that right?
Yeah. Normally it is this way with all the companies like us.
Okay. So, but specifically, I would assume that's because of a lull. But would you say that there is pricing pressure as we speak right now, even in the third quarter? And what are the trends there?
See, there is a steady bit of pricing pressure, at least in the commodity sector, because in the commodities, China has been dumping a lot of steel into India. So there has been a little bit of softening, and also due to the geopolitical reasons. But as far as our value-added products are concerned, which is approximately 50-55% of the product basket, there has been some pricing pressure, but by and large, it is not much as well compared to the commodities.
Now, Aditya, I just had a question now on your margins because it has been stable and, grown actually while revenue has been flat. Now, value-added products has been something that's, supported the margins, and please correct me if I'm wrong. What's the current percentage of value-added products in terms of your total sales, and how do you expect that going into, for ending FY25 as well as FY26 as well?
See, in case you recollect, as we spoke last time, means the last quarter, we are already undergoing a capex plan of around 1,000 crores entirely with the internal accruals. And after the completion of this capex of 1,000 crores, which will be completed over the next 6 to 8 months, currently our share of value-added products in the entire product portfolio, it is around 55%. This will be going up to around 80 to 85%. So in the next financial year, it should reach around 70-75%, and post that, once the entire benefit of the entire capex kicks in, it will be around 80 to 85%. So our strategy has been very, very clear, is that we want to be a low-cost player in all the category of all the products, and we also want to add maximum possible value to all the products so that the margins are protected.
Okay. Okay. Can you help me understand the scale up over the course of the second half of this year, though? You're saying that by next financial year, and I'm interpreting that, Aditya, as fourth quarter of the next financial year where you would be 75% value-added products in revenue. Is that the correct interpretation, or would you say that it would be right from the start of next financial year?
What I would like to say is that this particular capex program, it is happening in modules.
Okay.
For example, our ductile iron pipe capacity, which was 2.5 lakh tons last year, it is right now around 3 lakh tons. By the end of the third quarter, it will be around 5 to 5.5 lakh tons. So you will be seeing incremental volumes from every quarter year on. So when we are talking about 80-85%, it will be by the end of next year, we'll be reaching that in the fourth quarter.
Can you help me understand what the current capacity utilization is? I understand that more will come on stream, but in currently what you're operating, what is the utilization?
Capacity utilization for the plant as an aggregate will be in the region of around 80%.
Okay. Okay. So, and then what is the implication then, Aditya, you've mentioned that the scale-up will happen in the move towards a higher share of value-added products. You've already seen a 92 basis point or close to 1 percentage point improvement in the EBITDA margin for the second quarter. What is the kind of profile that will take place once you make that sizable shift? Are you moving higher?
Yeah. See, our guidance to our investors in the I was saying in all the investor con calls has been is that there will be is that our target will be to be in a region of a EBITDA margin of around 18 to 20%. 20%. Currently, we are at 15%, and we are expecting to move to 18 to 20%.
Okay, that is for this. So, but as I understand it, the guidance that you provided for FY25 is 17 to 18%. So you're saying next year you will get to 18 to 20%.
Yeah, absolutely.
Understood. Puneet?
No, just wanted to understand about, the ferroalloys capacity as well. Now, it has been, it is expected to grow. How are you seeing the current market for ferroalloys currently?
See, the current market for ferroalloys, it is also slightly muted because ferroalloy, if you talk about the generic ferroalloys is a pure commodity play. But when we are talking about our ferroalloys, we are talking about basically very specialized ferroalloys and for niche products. So our niche in this particular segment would be is that since we are making these specialized ferroalloys, which we are currently exporting to around 40 countries, so we will be trying to create a niche market which is already there for us right now. So our margin will be slightly better as when compared to the generic ferroalloy players.
What's the current competitive intensity in this particular market of ferroalloys? Because you are mentioning that you export to roughly about 40 countries, as you mentioned. How are you seeing the competitive intensity currently for the same?
See, competitive intensity in this particular segment, because the segment is very, very specialized, here the competitive intensity, it is not as much. Means in India, in fact, we are one of the only producers right now making these ferroalloy products on an organized basis. But if you take it internationally, there are some established international players, but their cost of production, it is not very cheap when compared to our costs. And also, but this is a very difficult market to penetrate. So the competition intensity arises not only out of the technological barriers, it also arises out of the marketing, I will say, difficulties associated with these products.
Last question then, Aditya. Leave us with an outlook on volumes, because given what we know and given everything that is happening, you also mentioned China dumping is a bit of an issue. Leave us with an expectation of how you think volumes will play out in the second half. You've certainly said that Q2 is weak. Do we anticipate that Q3 and Q4 will be significantly better than the first half?
Firstly, I would have to clarify that when I mentioned about China dumping, means I was very specific that China dumping is affecting the commodity. It will be affecting the prices of the commodities, like flat products, long products, TMT bars, sponge iron, pig iron, etc. But these prices, but this dumping of China does not affect the specialized products by and large on a day-to-day basis. Number one. Number two, as far as the volume is concerned, as the capex are actually now rolling in, and as the plants are being commissioned, so in every quarter we will be seeing substantial volume growth.
Fine. All right.
Thanks so much, Aditya, for joining us and giving us a view on your quarter two earnings. We wish you the best and look forward to our next conversation. But thank you so much for joining us today.